Focus: South Korea's central bank raised interest rates for the first time in more than 6 years, diluting further rate hike expectations. North Korea said on Wednesday that it had successfully tested a new ICBM that could cover the entire territory of the United States, but most of the market ignored the fact that the won strengthened 0.7 to a 2-year and half-year high of 1,076.8 prior to the close of the local market. South Korea's central bank's Monetary Policy Committee voted Thursday to suspend a 5-year easing cycle by raising the benchmark interest rate from a record low of 1.25 to 1.50, boosting economic growth as exports continue to heat up. At a press conference, Bank of Korea Governor Lee Kyol-la was asked if he could provide any guidance on the short-term monetary policy. He would not comment on this, saying only that he would pay close attention to economic growth and inflation so as to assess whether further growth is needed. Monetary Policy Committee by 6-1 votes to raise interest rates to 1.50. Member Kal Dong-chul voted against. His disapproval, along with some dovish comments, caused the won to fall more than 1 against the dollar, down from 1,090.2. Of the 21 analysts surveyed by Reuters, 18 predicted South Korea's central bank raised interest rates on Thursday and the other 3 predicted that interest rates would remain at a record low of 1.25. If we maintain the basic interest rates unchanged, there will be a risk of rising risk due to the releasing in the money market, Lee Jae-li said at a press conference. In a press release released after the resolution on interest rates, the central bank underlined fears of a weak job market while forecasting economic growth to be slightly higher than in October, suggesting central bank officials want to curb market expectations of a quick rate hike. The key is that the Bank of Korea has abandoned the wording of the employment situation improvement used in previous statements and switched to the job market to show some signs of weakening. In spite of the bold action on Thursday, returning to normalization of monetary policy will be a long process. There is no dispute about the gradual process of tightening the policy cycle, and the most important thing about today's policy meeting is to eliminate the uncertainty associated with the direction of the policy, said a fixed-income strategist at Korea Investment Securities Co. Limited. Chang Sob said. Thursday's decision means withdrawing from the emergency economic stimulus measures implemented since 2012, making South Korea into a policy tightening cycle. The Federal Reserve, the Bank of England and the Bank of Canada have begun to tighten their policies. With the exception of Sri Lanka, South Korea is the only Asian country to raise interest rates since Indonesia raised interest rates in November 2014. The market has digested the rate hike. South Korean won-dollar gained 4 ahead of Thursday, with bond yields jumped to a 3-year high this month as investors expected a rate hike in November ahead of the prevailing view. The Bank of Korea raised its forecast for economic growth this year to 8 from 10 in October and revised its inflation forecast from 1.9 to 2. South Korea's gross domestic product, GDP, grew at its fastest pace in more than 7 years in the third quarter, reinforcing the argument that South Korea is raising interest rates because of strong exports offsetting weak consumer spending. South Korea's planning minister of finance Kim Dong-yoon said this week that South Korea's economy is expected to grow by more than 3 this year, which is higher than the average growth rate of 2.8 in the past 5 years. The October inflation rate was 1.8 a year, below the 2 target set by the Bank of Korea.